In today's video, we're going over Cash App loans. I'm going to explain how they work and your better alternatives because Cash App loans are awful. In this video, we're going to go over how loans work, the interest rate for Cash App loans, how to manage your debt, how credit card grace periods work, how 0% APR credit cards are a better option, and how you can utilize your credit cards to pay your bills using Plastiq, and a lot of different services, excluding your credit card of course, to get by. I know times are tough for a lot of people. People might be turning to their credit cards, and that is still a better option than using Cash App loans. I'm going to show you how to get money from your credit card the cheapest way possible. This video is going to be super useful, so you might as well hit that like button now. Who am I? I am Dan, a guy who likes to get full value, and this channel's name? Full Value Dan. This channel just covers a lot of ways to get deals, beat the banks, and how to live a more frugal yet luxurious life. Cash App is now testing their loan system where you can get a Cash App loan between $20 to $200. Now, if you borrow any money from Cash App, you are getting ripped off. They have an automatic 5% interest rate for any loan amount you take, and if you pay it back right away or within 5 weeks, you still pay that 5%. So this is how it works. If you borrow money from Cash App, they give you 4 weeks to pay it off. If you don't pay it off in 4 weeks, they give you an additional 1 week to pay it off as a courtesy grace period. So now you have up to 5 weeks to pay back the money you borrowed plus 5%. So if you're borrowing $100, you owe them $105. So this is what happens if you don't pay off your loan within that 5 weeks. Then you get charged an additional 1.25% every week you don't pay off that loan. So first you have your 5%, then you have that 1 week grace period, and then you start getting charged that 1.25% interest rate per week. Now, with that grace period, I don't think they let you off the hook. Like if you don't pay that off, I think they're going to charge you an additional 1.25% starting the next week, and it includes that week of grace. So that's 2.5% the next week. Now, if we add it all up, 1.25 times 48 weeks, because there's 52 weeks in a year and there's 4 weeks of 5%, which is pretty much the same thing. We're going to use the calculator. 1.25 times 48 is 60%. So that's 60% APR plus that 5%. That's about 65% APR. You're paying 65% in interest to Cash App. Now, this isn't as bad as payday loans, but if you're gonna use the Cash App loan system, just know there are better options. And I'm gonna show you those right now. First off, a credit card. A credit card is already better than Cash App's loan system because credit cards don't charge you 65% APR. Let's say this credit card has 24% APR, which is the interest rate that you pay over the course of a year. If you break that down monthly, you pay 2% on your current balance every month. That is a lot lower than 5% already, so you're already saving money by using a credit card rather than Cash App loans. But if you just use a credit card and you're paying off your balance every month, you're technically getting a free loan from the credit card company every month. Think about it this way. You spend $100 on your credit card and then you pay it back a month later. That is a $100 loan that you're not paying any interest off because you paid it off in time. That is a 0% loan even though your credit card has a high APR. If your credit card statement due date is on the first of the month, you have 3 weeks up to the statement date to pay your balance off without being charged interest. This goes for most banks, but some of the more predatory banks will start charging you interest immediately. So for a majority of the big banks, you have a 3-week grace period from your statement date to pay off your credit card without getting a finance charge. So in this scenario, the first of the month is when you can start spending money, and then 3 weeks after your statement date, that's when the finance charge kicks in. So technically, if you time it from the very first of the month when the new billing cycle starts, you can have up to 7 weeks of an interest-free loan from the bank using your credit card. Now, I know this isn't cash exactly, but if you need to put spend on it, if you need to pay some bills, you could always use sites like Plastiq to pay off rent or utilities using a credit card for a small fee. Additionally, if you get a credit card with a 0% APR for, let's say, 12 to 18 months, there's a lot. I'm going to leave a link in the description that brings you to a blog post of the best 0% APR credit cards so you can avoid paying interest. I was in debt for a while and I got out of debt using this strategy and 0% interest credit cards because I do not like paying fees. This is kind of a sketchy way to get a free loan from a bank, and it's high risk, easy reward. So I had a friend, we went to Europe, and he was using his credit card at ATMs, pulling out money. For some reason, he was getting cash advances, but he thought it worked like an ATM card. He did not have many credit cards before, so he was kind of confused how it works since he got a PIN. Needless to say, when the trip ended and he saw his bank statement, it was over $100 in cash advance fees. He was going to pay those fees, and I said, no. You've been banking with Chase for a while. It's worth it to call them up and ask them if they can waive the fees. Just explain your story. All you have to say is, yeah, I got these cash advances. I did not know I was going to get hit with these fees. I got the card because I didn't want any foreign transaction fees. So I used it at an ATM because I thought there were no fees. I did not understand that there was going to be a cash advance fee. And even though he accrued all those fees, they reimbursed him. Now, why did he accrue so many fees? Because I thought he was using the Charles Schwab card, and since we were traveling through Europe to minimize his risk, I told him to just take out small amounts of money from the ATM whenever you needed the money, because at the end of the trip, you don't want to be left with too much currency because you're going to lose that money in currency conversion fees anyway. So I always try to have enough money through a international trip where I end the trip as close to $0 in my pocket as possible for that currency, because currency conversion fees will just kill you. Also, if this video has been helpful and these tips are pretty awesome, I'd appreciate it if you liked the video because that helps this video get out to more people and it beats the competition. Now, with 0% APR credit cards, you can just spend money on that directly. There are services online that help you pay rent and utilities with a credit card like Plastiq. So this 0% loan for a year or more, depending on the type of credit card, will help you out immensely. It's a lot better than getting a payday loan, and it's a lot better than getting a loan from Cash App. This is Plastiq. Plastiq helps you pay your bills using a credit card for a 2.85% fee. Now you can pay your loans, mortgage, rent, utilities, all using Plastiq, which makes it a lot easier than actually getting a loan from a bank or through Cash App. Venmo or PayPal. So if you have a Venmo or PayPal account, you know if you try to send money to a friend with a credit card, they're going to charge you 2.9%. Let's say you're using a 0% APR credit card and you have 12 months of 0% APR on it anyway. What you do here is attach that credit card to your Venmo or PayPal account. It's the same company, by the way. And you send money to a friend, a trusted friend or family member, where they will just give you the cash. Basically, you're sending them cash with a 2.9% fee through PayPal, Venmo, and then there's actual cash in your friend or family member's PayPal account. So they cash it out, they give you the cash, and now you have a 2.9% loan for the next 12 months or however long your 0% APR lasts. Now, this does come with a condition. You have to make sure on that credit card, you call up the credit card company and make sure you have the cash advance limit set to 0. Make sure no cash advance is possible on the card before you use it with PayPal, Venmo. This is just to make sure you don't get hit with any cash advance fee. Those are my alternatives. I explained why Cash App loans are awful. You should not get a loan from Cash App. You should not get a payday loan. You can use credit cards, bill paying services, and Venmo, PayPal. There are so many alternatives that are cheaper than getting a loan. Now, if this video has helped you out, you can please help me out by liking this video. That just helps more people see this video, and my ranking goes up in the YouTube algorithm because of the quality content. Now I gotta come up with a way for you to comment on this video. So let me know in the comments if you've thought about this strategy before, if you've used a payday loan, or if you've had to pay credit card interest and how you avoided it. Let's share our knowledge with everybody so everyone can beat the banks and not pay interest, because paying the banks sucks. Yeah. It's like a poor tax. Like, oh, I'm poor, I need to borrow money. It's like, okay, but we're gonna charge you more money. It's like, tax on the poor. And that's awful. So that's why I personally had to come up with all my own solutions and research to figure out how to get out of debt and pay off these loans with giving the banks as little money as possible. As you build up your credit, as you get out of debt, you can get all these credit card sign-up bonuses, bank and checking bonuses, where you just make money from having money. Though more on that on other videos, but this one is for you people who are interested in getting a Cash App loan and need a better alternative. With that, I'm Dan. This has been Full Value Dan, and until next time.